The Healthcare Labyrinth podcast is back for another episode. Join Mark S. Ryan, a veteran health plan and health technology executive, as he explores the world of healthcare.
Welcome, everyone, to this edition of the Healthcare Labyrinth podcast. My name's Mark Ryan. It's a pleasure to be hosting the podcast, and thanks to everyone for listening in. We will probably have a little longer podcast this week. It's a bit of a special edition. We're roughly at year's end. We're early in January here on this airing. And as I normally do, I sort of sum up the year's healthcare happenings and give you some predictions in the new year. So this will be, again, a bit longer. We'll take our normal breaks, but let's get right into the 2024 year in review and the 2025 predictions. So 2024 was clearly a big year in healthcare. And given the election outcome and the change in the administration from Democrat to Republican and the so-called Republican trifecta in Washington, D.C., we'll tell you a little more about that. 2025 will be a massive healthcare year as well. So let's start out with the major healthcare happenings from 2024 here. First, the National Health Expenditure data was published for 2023, and costs rose 7.6% from 22 to 23 and reached almost $4.9 trillion. This hit 17.6% of the gross domestic product dedicated to healthcare. Healthcare expenditures will hit almost 1/5 of the economy by 2032. So things are clearly out of control here. Insurers certainly struggled, and there was a bit of a crash of big healthcare. What do I mean by that? Well, the year 2024 was dominated by the travails of some big healthcare companies. Generally, all companies' insurance arms struggled with the return of utilization in healthcare post-COVID pandemic and rate issues in Medicare and Medicaid. CVS Health ousted its CEO due to the major financial problems at Aetna and its pharmacy retail chains. Humana also faced major financial problems due to its focus on MA. Centene struggled in both of its MA and Medicaid lines. United Healthcare and Cigna fared a bit better. Some regional insurers appeared to struggle as well with the trends, with some exiting the MA line of business in whole or in part. The so-called insurtech companies were one of the few bright spots for financial performance and growth in 2024. Let's talk about Medicare Advantage or MA woes here. Capitol Hill regulators and critics continued to point the finger at MA in many ways. Lawmakers, researchers, and regulators continued to criticize MA overpayments, plan risk adjustment practices, including the use of health risk assessments and manual chart reviews, supplemental benefit utilization, and marketing practices that lead to steering of enrollees to plans based on broker compensation arrangements. MA plans will see the second year of negative rates in 2025 due to a new risk model that was adopted. Higher utilization also hit MA plans hard, as did poor star results. As such, plans cut back benefits to some degree in 24 and in a major way for 2025. The Centers for Medicare and Medicaid Services put in place some reforms in MA, including a new risk adjustment payment model, supplemental benefit transparency, and proposed marketing changes. An earlier broker compensation reform put in force by CMS was struck down in court. A new prior authorization rule began driving up costs because CMS is now requiring MA plans to follow the traditional fee-for-service rules. They're essentially taking managed care out of managed care. Let's talk a little bit about MA star results and some changes. MA plans saw the third year of poor star results when the 25 star ratings came out in October. This impacts revenue and compounds the financial issues that resulted from the negative rate hikes in 24 and 25. In 2024, Tukey Gate forced CMS to recalculate 24 star ratings after several plans won lawsuits against the agency's calculations. CMS has already lost in court on 25 ratings, triggering changes right now for United Healthcare and Centene, but more could come. Let's talk MA growth. Notwithstanding the financial woes, 2024 saw rapid growth in MA because of the clear value compared with traditional fee-for-service Medicare. However, initial 2025 growth appeared to have slowed during the enrollment season that started in October, with benefit reductions, cost sharing, and premium hikes and geographic contractions of benefits. Special needs plan growth was major in 24, and plans appeared to be investing heavily in these products for 2025. The standalone Part D PDP program also saw premium increases, benefit reductions, cost-sharing spikes, and coverage impacts, largely due to the IRA Part D changes mentioned below. CMS had to put in place a special, perhaps extra legal in my view, premium stabilization program to control premium hikes. That will last for the next 3 years. The Part D changes in the IRA could jeopardize the long-term health of PDPs. In good news, a major study showed that the growth of MA appears to save the entire Medicare system money by positively impacting provider behavior in the fee-for-service program and thus reducing costs there as well. This is contrary to the MA critics' cries of overpayment in MA. On to IRA Part D changes that I mentioned a little bit about. The Inflation Reduction Act of 2022 created the first drug negotiations in 2024. The drugs were announced early in the year and prices set in the fall. The prices go into effect on January 1, 2026. Results were mixed with the setting of the prices. The net prices on the 10 drugs that were negotiated for 2026 come in under other government programs, but are still well above other developed nations. Brand drug makers continue to challenge the law, but by and large have lost in court. Because of the slow pace of the drug negotiations rollout and the fact that it applies only to Medicare Part D, many states have passed laws creating drug affordability boards. About a dozen exist today, with another dozen states looking at it. And what's interesting is that these drug affordability boards are basically setting maximum prices in their states for the areas they control at the Medicare Part D caps as well. An analysis also concluded that brand drug makers spend more on stock buybacks and marketing than on research and development. Quarterly rebates to the government and in reduced cost sharing continue with the IRA requirement that drug makers limit inflationary increases or pay additional rebates or penalties. The 340B discount program remained controversial, with brand drug makers arguing hospitals and other providers are abusing the intent of the low-income drug availability program. Drug companies sought to move to a retrospective rebate rather than upfront discounts on drugs in the program. The Biden administration stopped the conversion by the brand drug makers, and now 3 drug companies are suing the government on the 340B program. With that, we'll take our first break, and we'll come back to tell you more about the year in review in healthcare for 2024. Be right back.
Health plans and insurance are confusing. Our healthcare system is in dire need of reform. Health policy expert Mark Ryan tackles both issues in his book, The Healthcare Labyrinth. It is both a guide to navigating health plans and fixing American health insurance. Mark dives deep into how health plans and the American health insurance system operate. He then outlines a comprehensive reform agenda for the system as a whole, including pricing, emphasizing health and care management, and ensuring affordable access to health coverage in a private delivery model. Mark is a bit of an unconventional Republican in that he believes affordable access is the morally right thing to do, and that it is also fiscally prudent for our nation. Learn more about Mark's book, The Healthcare Labyrinth, at healthcarelabyrinth.com or search at leading bookseller websites. Available in print, ebook, and audiobook forms.
Welcome back, and we hope you're enjoying this episode of the Healthcare Labyrinth podcast. We're talking about healthcare in 2024 and making some predictions for 2025. We'll continue on with our review of 2024 healthcare happenings. Our next topic is the rise of GLP-1 weight loss drugs. 2024 also saw the rise and proliferation of GLP-1 weight loss drugs. The drugs got approved for additional disease states, and the Biden administration even proposed to make the 1,000 plus per month drugs available for obesity alone in Medicare Part D. Employers have greater availability for obesity coverage as well. Medicaid, Medicare, and commercial plans saw retail drug costs surge due to GLP-1 adoption in costs. Some employer groups have pulled back on coverage for weight loss alone due to the crushing burden of the cost. Our next topic, no Medicare doc fix. Medicare physicians again got left at the altar. By year's end, there was no permanent fix to compensate docs for decades of under-reimbursement. To add insult to injury, a 2.8% rate decrease will go into effect on January 1. Next is Medicaid redeterminations and shrinking enrollment. Medicaid redeterminations continued in 2024 post-COVID, which saw enrollment losses to plans. Still, the uninsured rate remains steady. Rates also troubled plans due to the dry up of extraordinary healthcare monies at the state level for Medicaid. Next, we'll cover exchange enrollment. Exchange enrollment continued its leap upward, reaching its highest level yet in 2024. This was driven by Medicaid enrollment conversions as well as enhanced premium subsidies. No movement occurred in extending premium enhancements past 2025 when they are due to lapse. Preventative services in the Affordable Care Act suffered a blow when a federal court called into question the administration's ability to dictate some preventative services at no cost. The decision is on appeal. In the employer and commercial coverage world, employer and commercial coverage saw huge price surges in 2024 and the same projected for 2025. Major utilization and drug spending increases are to blame. Big healthcare saw major scrutiny in 2024. Compounding their financial woes, big healthcare also saw major policy scrutiny from regulators in Congress. Congress opened up investigations of big healthcare and their pharmacy benefit managers. Vertical integration was a hot topic on Capitol Hill. The Federal Trade Commission released a scathing report on the big three PBMs and sued them over insulin pricing, while the major PBMs sought to change their pricing models. 2024 also saw greater traction of transparent PBMs, with some major insurers and employer groups migrating away from traditional PBMs to transparent upstarts. Mark Cuban's pharmacy venture also gained greater traction, and the entrepreneur promised to displace the old regime. The negative press continued for PBMs with a blockbuster report, which said that PBMs received payments from brand drug makers to not place safety controls on opioids and related drugs. Insurers were heavily criticized for their agreements with data analytics entity Multiplan. They were collectively accused of under-reimbursing out-of-network care and transferring major costs to consumers. The Biden administration's antitrust program went beyond just PBMs to heighten scrutiny of other provider mergers. While a study indicated that oversight and review has been meager, there was some oversight and pushback by the Biden administration on some mergers and consolidations. This includes scrutiny of private equity firm investment in healthcare and the impact on quality. Some notable mergers, again, were called off in the provider world. The Cigna Group announced it was selling its MA business to Healthcare Services Corporation, a mutual Big Blue, in several states. A rumored merger of Cigna and Humana did not materialize. In an attempt to curry favor with a nursing home union, the Biden administration passed staffing ratios for nursing homes. The industry says the levels are infeasible, will increase costs dramatically, and lead to the takeover of smaller nursing home firms by big ones. There were also notable bankruptcies tied to private equity in the healthcare world. PE deals faltered. Data from the first year of the No Surprises Act arbitration shows that providers win 3/4 of awards and payments are up from pre-No Surprise Act rules. And while reforms were not passed, Congress on a bipartisan basis began to show important interest in instituting site-neutral payments and greater transparency. So there's scrutiny of some big healthcare and providers out there. Let's talk a little bit about the Change Healthcare cyber attack. The Change Healthcare cyber attack caused much of healthcare to come to a standstill for months in 2024. The impact is still being felt out there. Change Healthcare is a company of healthcare giant United Health Group. The Change system had vast reach over operations in health plans, provider offices, and pharmacies. United bought Change to extend its reach and increase profits. Since the attack, it has become clear that Change had major vulnerabilities, and United did little to enhance security or integrate the company into its overall ecosystem. In response, the Department of Health and Human Services just issued a proposed cybersecurity modernization rule to protect consumer information. Much more will be needed in terms of expertise and funding, though. Let's talk interoperability. CMS finalized a far-reaching interoperability rule that impacts MA, Medicaid, and the federal exchanges. It requires electronic prior authorization for medical service requests, lays out formats to facilitate information exchange, and speeds prior authorization approval timeframes. Let's talk a little bit about the United Kingdom. Interestingly, both King Charles and Princess Kate unfortunately were diagnosed with cancer in 2024. Both appear to be recovering, but the royals' diagnoses and treatment called attention to the shortcomings in the UK socialized system, including underinvestment in technology, long waits for specialty visits and diagnoses, and delays in cancer treatment. Other headlines in light of the diagnosis of the royals also talked about shortcomings in other developed nations' healthcare systems. So clearly, throughout the developed world, there are some challenges in healthcare. Let's talk election now. In a topsy-turvy election, President Biden dropped out, Kamala Harris stepped in, and former President Trump came back from the political dead to be only the second president to serve non-consecutive terms. He will be inaugurated on January 20th. Trump hit the ground running by naming who he wants in his cabinet. At HHS, he wants Robert F. Kennedy Jr. Over CMS, he wants Dr. Mehmet Oz. There are already discussions of a major regulation rollback in healthcare. Government programs may not see major restructuring, but they likely will see cuts due to the new sort of Department of Government Efficiency and a commitment to extend the 2017 Trump tax cuts. In other news, the Supreme Court struck down its previous Chevron deference decision that gave executive agencies wide regulatory discretion in rulemaking. This will have huge implications for the future. The Commonwealth Fund in 2024 also updated its stellar mirror analysis, comparing the U.S. healthcare system to other developed nations. Again, the study finds that America spends the most on healthcare as a percentage of GDP. It spends anywhere from 30% to 100% more annually. At the same time, it continues to have health outcomes that are dead last. What's worse, it is an outlier against even the lowest performing countries on health outcomes. All of this led me to write a healthcare reform series in 2024. You can study the plan and the details via blogs and podcasts at healthcarelabyrinth.com. My proposal has far more details in my book, The Healthcare Labyrinth, which is also available at healthcarelabyrinth.com. With that, we are going to take our second break, and then we'll come back to get into some of 2025's predictions. Be right back.
Lilac Software is proud to work with the Healthcare Labyrinth website to educate people on the healthcare system. At Lilac, we believe transparency is so important in healthcare. The healthcare system is opaque, and Lilac is trying to bring clarity to data and unleash the best member care, reduce costs, and improve outcomes. Our cloud-native payer platform revolutionizes data insights and analytics. Plans have all the data they need, but in silos locked away in point solutions. At Lilac, we solve the data fragmentation problem and help plans turn complex data into actionable insights, leading to greater operating leverage, tight cost controls, and healthier members. Health plans can improve STAR scores, reduce medical expense, drive revenue, and more. Quite simply, with Lilac, you can drive better business and health outcomes. Learn more at lilacsoftware.com.
Welcome back, and we hope you're enjoying this episode of the Healthcare Labyrinth podcast. We're talking about healthcare happenings in 2024 and making some predictions for 2025. And so after that last break, we had just concluded all of the 2024 year in review, and now we're getting into the 2025 predictions. So as I always say, I play Nostradamus to prognosticate about what will happen in the next 12 months in the world of healthcare. Despite my Irish last name, I do have French blood, 50% French Canadian, so I count it. But I don't claim to be an oracle or seer like our 16th century physician, apothecary, and astrologer friend. Nonetheless, I will do the best I can. I do take a page from Nostradamus's book, though, in that my healthcare predictions are sometimes deliberately vague. They include a lot of mays, coulds, shoulds, and possibles, so as to allow me to amass a reasonable record for those tracking and putting together my forecasting report card for the history books. It also tends to make my head bigger, as if I need that, and boost my sometimes fragile ego. So here is hoping my crystal ball is clear and not cloudy, but don't hold me to any of this. I am simply your intrepid healthcare labyrinth blogger and podcaster having a little fun here. So if you want to hear about my report card for 2024 predictions, you can go to my January 2nd blog to see how well I did. I had a bit of a mixed record in 2024, to be honest with you. So let's get on to 2025 predictions here in healthcare. One caveat before we proceed: do not confuse my predictions with my desires. I am an investment-minded Republican, who thinks reasonably expansive coverage is a good thing for the nation, healthcare, and its people. Unfortunately, I do predict some things here that deviate from that core philosophy, but I'm also trying to be a realist about what will be happening in 2025. So let's first talk about the new political regime. While Donald Trump is perceived to have a mandate with his trifecta in Washington, governing will not be smooth sailing given the tight numbers in each chamber of Congress. I think Trump will weigh in on the speaker's race and urge unity, but current Speaker Mike Johnson may not survive, which could create even more volatility in 2025. And this obviously is being recorded before the speaker election. So you already know that outcome, and I don't. Again, I think he could be in trouble. Congress has to pass a final federal fiscal year 25 budget, pass appropriations bills for 26, and make room for the extension of the 2017 tax cuts that are set to expire at the end of 2025. Thus, spending cuts will dominate in 2025, in my view. The Republicans will have a hard time going real deep in some areas, but the Department of Government Efficiency, DOGE, will mean sweeping cuts to the federal budget. Trump will be focused on a legacy of shrinking the size of government, tax cuts, and a robust economy. While making America healthy again will be a reality, it will be much lower on the priority list for the administration and Congress. I predict that Trump and the GOP will shy away from a master overhaul of healthcare programs, such as tossing the ACA and instituting Medicaid block grants. Instead, the spending cuts package will sculpt out some critical funding in healthcare programs through more nuanced approaches to benefits, mandates, and regulations. This will impact funding in government programs as well as coverage over time, but this gives the GOP the ability to save but lessen the political attacks, at least somewhat, from Democrats regarding gutting safety net programs. The GOP will stay with Trump on his nominees, and he will get almost all of them. This includes Robert F. Kennedy Jr. to lead the Department of Health and Human Services and Dr. Mehmet Oz to lead the Centers for Medicare and Medicaid Services. Other healthcare nominees will be secured as well. Prominent conservative healthcare think tanks, such as the Paragon Health Institute and the Heritage Foundation, will have some sway in the administration. I think Trump will resist adopting more radical proposals on healthcare from these organizations, but essentially mine spending cut ideas from these groups to save dollars. I will predict that while Trump won't seek to overly disrupt employer coverage, he will be intrigued by ideas for creating more accountable and cost-effective individual coverage options. Let's make some predictions on overall healthcare in general. The long-term outlook of health plan stocks will look mixed in 25. Trump could be friendlier on some rate issues for Medicare Advantage in the short term, but the somewhat deep overall budget cuts will be seen as eroding enrollment and earning potential in Medicaid, the exchanges, and to some degree in employer coverage and MA. While Trump will be friendlier to healthcare, I do predict continued scrutiny of insurers' vertical integration and size. The antitrust focus of the Biden administration will moderate, but not go away. Trump and the GOP are likely to continue to have some focus on provider consolidation and acquisition as well. The budget cuts by nature will lead to passage of some key healthcare reforms on the plan and provider fronts. Given the downfall of Chevron deference and courts striking regulatory oversteps in general, Trump will use the opportunity to repeal rules and regulations, including in healthcare. There will be further steps toward greater interoperability given a focus on technology and innovation. worry about the threat of foreign actors to undermine the economy, some cyber preparedness funding will be allocated for healthcare as well. With that, we'll go to our third break, and we'll be back to conclude our predictions for 2025. Be right back.
The Healthcare Labyrinth is no ordinary website. It features news and commentary from one of the nation's leading healthcare policy and technology experts. Mark Ryan combs the internet for the latest healthcare news and publishes a news feed each weekday with summations and Mark's insights. Twice a week, Mark publishes a blog to go deep into a current issue. And of course, Mark hosts a podcast each week to delve even further. All of this is available at healthcarelabyrinth.com. Visit each day for the latest happenings in healthcare. As well, learn more about Mark's book, The Healthcare Labyrinth, at the website. That's healthcarelabyrinth.com, your go-to source for healthcare news.
Welcome back, and we hope you're enjoying this episode of the Healthcare Labyrinth podcast. We're talking about the 2024 healthcare year in review and predictions for 2025, and we are back from our third break, and we will be concluding our predictions in this segment. So we're going to talk about health plan predictions now. Again, health plans will breathe a sigh of relief with Trump being friendlier to managed care. But reforms will occur, including on the pharmacy benefits manager front, transparency, and overall accountability. Anti-corporate welfare Republicans will influence Trump here and temper his more friendly approach. We will see continued actions to restrict prior authorization and claims denials. Health plans will continue to struggle in 2025 due to high utilization, some inflation, and a generally poor rate environment for government programs. In general, though, the big plans will plot their course for a return to normal margins after a tumultuous 2024. Expect some possible concessions on MA rate issues. Further job cuts will occur in 2025 at the health plans. As for PBMs, a bipartisan consensus will emerge around PBM reform, with the passage of sweeping changes to how PBMs earn money and operate in the market. The administrative investigation of PBMs via the Federal Trade Commission, I think, will continue. Transparency-focused PBMs will gain further traction with the changes, and the big three PBMs will suffer. In terms of provider predictions, Medicare physicians will see a reversal of their calendar year 25 rate cut, but likely will not see a permanent doc fix given spending cuts. There is a possibility, perhaps, of a partial fix. Hospitals will begin to lose their battle on site-neutral payments as Trump and the GOP need the savings. The Trump administration will continue efforts across Medicare and Medicaid to bring value-based care and payments. On to Medicare Advantage predictions here. Despite the spending cuts, insurers could get the administration to ease or reverse a third year of negative rates in 26 to help stabilize MA finances. Still, plans will again reduce their footprints and benefits for 26 to meet investor margin demands. MA will grow in 25 as well as for the 26 open enrollment, but I expect growth to be more tempered than in the past. Special needs plans investments will continue within CMS to tackle dual eligible costs as well as by MA plans. The GOP lawmakers focused on corporate welfare will team up with some Democrats and perhaps even Trump CMS to make some changes on the MA front, possibly including overpayments and risk adjustment. These make good savings targets, star reform, supplemental benefits, and marketing. Trump CMS will likely pull back some on the MA and Part D rule for 2026. Some changes to the minimum MLR could occur, as well as the elimination of the Biden proposal to extend coverage of GLP-1s to those who are obese. It will be deemed too expensive. After 3 years of poor star performance, I predict there could be a fourth year of bad ratings, whether another decline or roughly comparable results to 2025 ratings. One last quasi-prediction. While it is more of a long shot, Trump's budget cuts could include a provision to make MA the default enrollment option for future Medicare enrollees, an opt-out concept rather than an opt-in, combined with a voucher-like system that caps annual growth in the Medicare program on a per-person expenditure basis. This would surely send insurer stocks soaring, given the favoritism that it would show to private managed care. Let's go on to Part D here. The Trump administration will not undo the IRA's Medicare drug price negotiations or inflation rebate provisions. While Trump has backed away from a tax on big pharma prices, I still see him as volatile on this issue, and he could make some other proposals to rein in drug prices. The Trump administration will investigate the Part D changes in the IRA and perhaps pull back some of those out of concern for the financial stability of the standalone Part D program and rising premiums. In Medicaid, while I don't again predict radical restructuring in Medicaid, no block grant or per capita cap program, I do expect the budget cuts to rein in Medicaid expenditures. Prime on the list is lowering the Medicaid expansion federal match and perhaps reducing the Medicaid floor reimbursement. Trump will deprioritize coverage expansion here and back work requirements and novel state waivers. On exchanges, exchange enrollment will continue to grow in 2025, but perhaps falter going into 2026. Betting odds are that the enhanced premium subsidies will expire at the end of 25 due to the sheer cost. I guess there's a long shot possibility of an extension for 1 year. Otherwise, Trump will not seek to repeal Obamacare, but budget cuts could reduce benefits and subsidies as well as make other more quiet reforms. Trump will use regulations and limits on outreach funding to deprioritize exchange enrollment. Of course, these changes, as well as ones in Medicaid, could mean the uninsured rate goes up in 25 and beyond. Last, on employer coverage, while the business lobby is strong, there is a low to medium probability that the spending cuts could reduce in some form the tax deductibility of employer health care costs. Employer coverage will see major cost increases anyway due to utilization and retail drug costs, but certainly any change to tax deductibility could raise major concerns with employers and could further transfer costs over to workers and create additional unaffordability issues. With that, that concludes our predictions and our year in review in healthcare. We'll see you next time on the Healthcare Labyrinth podcast. Take care.
Thanks for joining Mark and the Healthcare Labyrinth podcast. Go to healthcarelabyrinth.com each day for the latest healthcare news. See you next week on the next Healthcare Labyrinth podcast.